Hey, welcome to the Hiatus Capital Fund webinar. I am Ryan Andrews. I'm the CFO of the company. And Jesse and I have done 28 of these webinars over the last couple of years, and we almost always do them together. But today he is traveling. He's actually out of the country right now. And so I'll be going through the whole pitch, just me. So this will run about 20 minutes, and then we'll have time for Q&A after that. So let's kind of jump in. Today, I'm going to share about some of the monumental shifts that are going on in the housing market. We're going to be covering both the long-term demographic trends, some of the short-term disruptions with interest rates, and how we're adapting to those shifts, and positioning our company at the center of these changes. I'll share with you our unique approach to building communities and building homes in an environmentally friendly way. And I'll introduce you to our different housing types and our projects and show you why they're so popular with a new kind of homeowner. Lastly, we're going to outline our track record, and I'll finally show how you can be a part of this both philosophically and financially by participating in the Hiatus Capital Fund. Because there's been so much shifting in the housing market and the economy over the last year, primarily because of the rapid rise in interest rates and therefore mortgage rates, I just wanted to tackle some really important questions right off the bat related to our fund's financial position and our projects and what our goals are for 2023. We believe in total transparency, and so just sharing a couple of numbers here. Basically on the state of the fund is really well capitalized. We're under zero liquidity or solvency stress. And that is really a function of how we designed this fund 2.5 years ago. 2.5 years ago, the housing market was really hot. It was hard to imagine it would ever correct at that point. But it certainly has, given interest rates. And so we knew when we were setting the fund up that there was no way we would go through a 5 or a 7 year fund cycle with all of these projects without there being some kind of correction in the housing market or increase in interest rates. We didn't know what it was, but we believed it would happen. And so we created the fund in such a way that we would be set up to really weather that stress. And now that the stress is here, we couldn't be more pleased by the way we're structured and set up. So just kind of some high level numbers. The fund has about $800,000 in cash sitting in the bank. That's great. That's about 2 years of runway right now if we don't sell any homes. And we can actually continue to move forward with a lot of our entitlements and design given that cash amount. We probably would not do a whole lot of construction, but if we needed to pause on our projects, we're in great shape. We're carrying $1.6 million of debt right now. That's construction debt on our Roosevelt project. That's 2 homes that are under construction. It's about a 23% leverage rate. So very, very low in an industry that normally has, 75 to 80% leverage. So very low leverage amount here. That's one of the big reasons we're not under stress. And then lastly, we have about 5.3 million in total equity from investors in the fund. All that supports a book value of assets of about 6.8 million. The fund's NAV is 6.7. That's a little bit more of like a market value approach, and then nets the debt out of that book value. So that's kind of the delta between those two numbers there. Overall, the fund's assets can basically consist of 4 things. We own 7 permitted lots that we're ready to build on. 2 are under construction. We own the land that's permitted or will be permitted in just a couple of weeks for our 40-unit apartment building. We own 9 paper lots here in Bend, Oregon. That means the city has approved our site plan, but we have not started any infrastructure construction or streets or utilities. And then lastly, we own 3 acres that we're working through entitlements on 40 homes. We acquired that in cash this summer. So those are the assets. The capital goals for the fund, the reason we're raising equity right now after not raising any equity last quarter, because we'd had such a successful raise early in 2022, is basically two things. Number one, we're raising capital to be able to move forward with construction so that we can sell into a recovery. It obviously takes a long time to build homes and apartment buildings. And so we don't want to stop and wait till there is a recovery and then begin building and then kind of miss it. We want to be building throughout kind of this slowdown time or this softening so that we're ready to sell into a recovery. And that basically is Penn Apartments that we'd like to start this next year, which I'll share about later. And then later in 2023, we want to start the horizontal construction for Ninth. Kind of a secondary capital raising goal would be to have a little dry powder, so to speak, so that we could acquire distressed acquisitions or land or finished lots from other builders over the next year. We believe there could be some opportunities for that. So that's a little bit of a long introduction before I get into the company, but wanted to just tackle kind of our position today, given the state of today's housing markets. So let's kind of go into the demographics. There are some massive demographic trends that are happening right now in housing. And so for the last 85 years, the housing market's really been driven by the baby boomers. In 1946, the United States population was 140 million total people. And then over the next 18 years, there were 76 million babies born. It's kind of no surprise the baby boomer generation has dominated a lot of things over the last century, and housing has certainly been one of them. How that kind of related to housing was the baby boomers' parents, with widespread access to cars really for the first time, wanted to raise their families in single family homes with yards, and they didn't mind driving to work. So remember, at that time, there were about 100 million less cars on the road in the United States. And so traffic was not a big issue. And home builders responded to this demand by creating the suburbs. So the suburbs are neighborhoods that are all residential with very little commercial. They're centered around cars as primary transportation. They're not walkable. And the homes tend to be large and spread out, kind of like this picture here on the slide. As the baby boomers formed their own families in the 70s and 80s, they preferred this type of housing as well. And so more and more suburbs proliferated. But at the same time, the demographics of the United States begin to shift. Nuclear families wanting a big home in the suburbs today has really shifted. It used to be a majority of households, and now it's only about 20% of total US households are that nuclear family. And 80% now are made up of singles, couples, unrelated adults, single parents, this large cohort of households that have different tastes in housing, prefer walkability, they prefer access to retail and services, shorter commutes, less yard, less maintenance, smaller homes, less cost than traditional homes in the suburbs. And the type of housing that they prefer is called the missing middle housing. And I'll almost say that in quotes, in air quotes here, because missing middle housing is something you'll hear me refer to a couple times in this. But basically, there was very little of this housing type that was being built in the US over the last 60 years. So before we talk about how we're addressing this, let's talk about why. If there's so much demand for this, how come it hasn't been built? Well, the suburbs model of city planning, as it proliferated, it got codified into restrictive zoning rules. And that encouraged, sometimes even forced, builders to create sprawl. And then it was further codified by cities as their building codes similarly encouraged, or perhaps again forced, builders into bigger homes and made smaller footprint, high density home building illegal in a lot of cities. And then lastly, there was so much momentum in this type of development in the United States, and it's been such a seller's market as US population has grown, and there's been so much demand for housing that builders didn't really need to change what they were doing. It's what they knew how to do. It's what cities knew how to do, and everybody just kept doing it. But today, this is finally starting to change, and Hiatus Homes is positioned at the front of this trend. How are we changing this? By designing and building these new types of housing, some of which we call this missing middle housing, we are working with the city and the state to get codes changed, both building codes and zoning, in order to actually incentivize this type of housing. And so we are now supplying this type of housing that's truly needed and wanted by so many. And this is where I'll kind of introduce what this missing middle housing is. It's basically either small footprint detached homes, like what you can see on here. This was our original development, which I'll talk about in a minute. Or it could be attached wall, townhome style, or small apartment buildings. But basically it's structures that fit in with a neighborhood or mixed use, but it's not these high density, high rise 200 unit apartment buildings. And that's the missing middle housing today. So with all of our projects, when we approach trying to solve this problem, we ask ourselves, what's the best design for this particular piece of land in regards to the eventual resident? What's the surrounding community need? How will these homes in this development fit into the rest of the neighborhood? How will it be used, and what's around it? We really focus on the humans and let the humans kind of guide our design motif. We have 4 pillars in our approach to housing. First, we focus far more than a typical builder on design. That starts with the design of the neighborhood and the walkability and the services, all the way into the attention to detail required when building in a small footprint. We prioritize energy efficiency with design, windows, insulation, and solar. All or most of our homes are net zero or net zero ready. And we set our homes apart with smart home technology. We want living in a Hiatus home to be an experience and not just kind of like a dumb bricks and mortar home. So our homes feel very different. And then we're able to build between 2 and 4 times the density of traditional single family development, meaning we can supply more housing in the same spaces. We focus on small footprint homes, attainable by design pricing, and being able to deliver this in infill lots, which often don't make sense for a lot of builders. They want to build kind of in the suburbs, these huge sprawling suburban homes that I talked about a minute ago. Before we get into our projects, I want to share a little bit about Bend and where we are doing this. So I moved to Bend 12 years ago from Southern California. Like so many Bendites, I wanted to be in the mountains and raise my family in a small city with access to recreation. Well, it turns out I wasn't the only one that felt this way, and the Bend MSA has added about 50,000 residents in the decade since I've lived here. And we saw a huge surge of in-migration between 2020 and 2021 when COVID drove a lot of households out of the cities and out of the big cities and into small cities and recreation-based communities. So Bend is, kind of ground zero for that trend. So it's been fun to be here. When we talk about Bend by the numbers, let's talk about kind of how all that in-migration is breaking down. The Bend area has over 200,000 residents now. I think it's about 210,000 on the MSA. It's growing at 3.3% per year, and it has the highest per capita remote workforce in the country at over 12%. And the result is an estimated housing shortage of about 5,000 homes right now. So we started this company in Bend, and that's where all of our current projects are located. This has really created a huge advantage for us because Bend has developed some of the most forward-thinking zoning and building codes in the industry to solve the housing crisis. And we've been able to be a part of that and even have a real voice in how it goes. This is kind of a lot of times where Jesse jumps in and talks. Jesse was a real key thought leader and community leader in getting these building codes passed, working with the city. providing insight to some of the issues that developers face. And so much so that one of our houses is actually inside the Bend building code as an example of one of the models of housing that they approve and encourage. So point being, it's been a big advantage for us to be here, and we have a really strong partnership with the city of Bend to help with our projects. Okay, let's introduce you to our projects that we've completed, the 2 we've completed, and the 4 that we're working on right now. The first is Hiatus Benham. This was the first development that we put together. This used Ben's brand new, at the time, cottage code that was adopted by the city in 2015. The development was 22 of our cottages arranged in 4 little housing clusters. And these clusters are kind of like half circles, and they face into a shared open space. And the cottage development is designed to facilitate the connection between residents. So by connecting the community with community gardens, a pond, other open spaces with shared pathways, this development really encouraged a community aspect to it that was new at the time for housing here. So as the finance guy, I'll say this development was a huge hit. It was very well received by the community of Bend. It was a massive financial success for our investors, and it generated 20% returns, mid 20% returns for some of the investors. A few of them almost doubling their money in a little over 2 years. So very successful project. We moved on from that and did the Hiatus Roanoke project. The Benham cottages that I just showed you were about 50% more efficient than a home built to current building code, and a couple of them had solar on them, and the last one even achieved net zero. But with this next development, Roanoke, we wanted to go out to make all the homes net zero or net zero ready. And so Hiatus Roanoke consists of 10 homes. This is a 2-bedroom, 2-bath home, and it's located in Bend in a really desirable West Side neighborhood. It's totally walkable to coffee shops and a grocery store and a school, just a great location. And it features sweeping views of the Cascade Mountains. You can see from that second story, full glass panoramic doors and the big decks. The houses are totally beautiful. The homes sold for about $200,000 over their original forecast price. And so that project was really successful as well. It generated about 29% IRR yields on that project. So great project. After the success of the Benham and the Roanoke project, we created the Hiatus Capital Fund in mid-2020. And the goal there was to efficiently capitalize a series of development projects. And, think local investors funding local projects. And the first project in that portfolio is Hiatus Roosevelt. This project is just over half an acre and consists of 7 total lots. Each lot has a 3-bedroom, 3-bath home that's 1,300 square feet with a detached garage, and it has a studio ADU above that garage and back. Lot 1 is 2 weeks from completion, maybe 1 week from completion, or kind of moving forward on some things. Lot 2 is being framed. I think at this point the roof is on even. So like Roanoke, all the homes in the Roosevelt development will be net zero ready. We've added a ton of kind of environmental and smart home technologies, including a hot water circulation system for plumbing that'll save thousands of gallons of water. We upgraded our ERV system to optimize indoor air quality, even during a wildfire smoke event, which if you've spent time in Bend in the late summer, is becoming almost an annual season, is wildfire season. And all these upgrades will greatly reduce monthly utility expenses. And so the result here is our most efficient home to date. And we are really proud of these homes and how they're coming together. The first home will be listed for sale at the end of December. And so look for an exciting announcement on that. We wanted to share some data on the Bend housing market since there have been so many shifts in the last year, with interest rates going up above 7 on mortgages at one point. They've now come down just a little bit to be in the 6s, but the median home price in Bend is $680,000, which is back to what it was 1 year ago in November 2021. But that's down about 12% from a high of 773, where prices topped out in March of this last year. The Bend housing market is greatly differentiated by price ranges. You can see on the chart on the left, there's an increase in transactions in that 1 to 4 million price range. These are often buyers from out of the area that are coming to Bend with significant equity to put into a new home. And they tend to be less sensitive to interest rates than some of the lower price points. Just as kind of some data points here, our original Benham project, those sold for prices in the 200 to 300s. They've now resold in the 400s. So those would be some of the least expensive homes in Bend. Our Roanoke project sold in the 800s, 700 and 800s. And then Roosevelt will sell in the 1.3s most likely. Or at least that's our goal pricing, because you have that little bit larger home and you have the ADU in the garage. And so you can offset even with the tenant some of that additional price, some of that additional cost. Another point, building permits in Bend are down for new home construction, meaning supply will most likely be tightening in 2023, which kind of goes to my number one goal I said on the original slide about where a lot of other builders are pausing. We want to build through this softening and be able to have homes ready on the backside of it to sell into the recovery. And so our overall summary here is that the Bend market is seeing some softening. That's clear, but demand continues to exist at the price point of our Roosevelt homes. And we believe the market will absorb lots 1 through 4 on Roosevelt over the next 2 quarters. And we can always pause on construction if things change. Okay, our second project in the fund is Hiatus Penn. This is the 40-unit apartment building in Bend's Orchard District. This building includes shared kitchen and living room spaces, as well as a gym, conference room, plenty of co-working space on each floor. Again, we basically took our cottage design and we put it into the form of an apartment building. And so the fund owns the land free and clear. We're currently in entitlements. We are almost done with our construction drawings, and we expect to have our building permit back from the city probably in early January, maybe by the end of the year. And this project is on track to start construction in early 2023. And this is the project that we are kind of raising capital in order to start. And I'll explain what that means at the end. The investors get exposure to all 4 of the projects in the portfolio, but the cash that we're raising right now is so that we can start construction on the apartment building. Here's a little rendering of the rooftop deck. It's going to be kind of a one of a kind project with amazing view of the Cascades. Here's an interior cutaway of some of the common spaces you can see on each floor. Here's another view of the 3rd floor common space. We call this kind of the modern cabin space. And then here's a cutaway from inside the units. We call these open 1-bedrooms. Very unique 13.5-foot ceilings with a open lofted bedroom and workspace upstairs. And then downstairs is a kitchenette, living space, family room, and a bathroom, closet, and storage there by the door. All 40 units are similar, are basically the same on this. Okay, when we think about Bend multifamily, we wanted to share a snapshot of the Bend apartment development pipeline. And you can see 2 things on this map that I want to point out. The first is our project is one of only 3 inside the 15-minute walkable zone around the Bend Central District. So most of the other projects are on the periphery of the city, and most of these other projects are larger. Ours is primarily walkable and a little bit smaller. And second, our project is on track to be ready before the bulk of the other development projects are set to come online. So you can kind of see here is a breakdown. There's about 2,000 units going through the paperwork process in Bend. We're kind of in the first, quarter or so of those. And not only are we kind of before the big bulk of large multifamilies coming online, but a lot of these are getting paused right now because they can't obtain construction financing. And so a lot of these projects are being paused. One last comment on the future of this part of Bend, kind of where the Hiatus Penn apartments are, is there is another apartment project that's about 6 or 8 months behind us that's going through the city. You can see that on the right-hand side. That's 36 apartments that are kind of 1 and 2 bedroom. So a little bit different product type than ours. And then there is a mixed use project that is under initial design phase on the corner. Rather than seeing that as competition, we see that as creating a real center of gravity for this corner of town, and our project really benefiting from all the construction around here and the improvements here. We also are slated to be the first one done of these, so we'll get out and into the market first. Okay, moving on to Hiatus 9th. This is our 3rd project in the fund. I'll talk about our last 2 just real quickly. This is a 9-lot small unit development in Bend's Orchard District. Each lot will have a twin home, which is a 1-bedroom unit with an attached ADU and a garage kind of pushed together. This is a really unique floor plan that maximizes density and provides a lot of flexibility for our buyer. They can live in 1 unit, rent the other, rent both units as an investment. This could be multi-generational living with adult children and parents living on one side, or adult or parents and their adult children or college children or something living in the other side. So just a very flexible type of housing. And this project is what I call paper lots, which means the city has approved our site plan, and we're working through the paperwork for horizontal construction, which will start later this year. Okay, the last project in the fund is Hiatus South. This is a 3-acre parcel of land that we purchased in cash this summer. This is down kind of back to our roots. It's just a block from our original Benham project with all the cottages. And so we couldn't be more excited about this. This is really going to be our flagship development in the Hiatus Capital Fund. We think we can fit about 40 homes in here. It'll be a mix of our 2-bedroom, 3-bedroom, and cottages in like a really unique, walkable, optimized site plan. And so we are early in our site planning and development and design stages of this project. And we might be able to start horizontal construction as late as fall 2023, so about a year from now. We're really excited about this project. Okay, kind of switching to the fund. So what we have here is an opportunity to basically open up this investment to a new kind of investor, not just like basically we're opening up homes to a new kind of homeowner, home buyer. We wanted to open up the investment capital side of this to a new kind of investor. So traditionally, real estate development like this got funded by Wall Street or huge private equity funds off the East Coast that didn't really care a lot about the local community. We wanted to change that and basically go out to individual accredited investors and families, both local and non-local, but we've certainly focused on local investors to raise capital for our fund. And the idea or the benefit there is that as these projects are successful, the profits that are distributed back to the investors are going back into the community and people that live here and care about what we're doing and building and how we're growing here. So I'll share the documents, the fund documents with everybody after this webinar, but basically we have closings every quarter. Our next closing is on December 31st. The fund is open to accredited investors only. We can talk about what that means. New investors come in on a unit pricing. It's kind of like buying shares in a company. So units are about $1,600 in this quarter's unit pricing calculation. And then investors get distributions as each project finishes and generates profits. So investors could expect somewhere between probably 4 and maybe 7 different distributions over the next 3 to 5 years, as kind of phase 1, phase 2, and different things wrap up and we finish these. We'll calculate the profits and then we'll send out a check. Then at the end of these 4 projects, we will send investors out their original investment, and they can kind of move on to a different investment or invest in whatever we're doing next at that time. And so that's how the fund basically works. Right now we have these 4 projects I just described in the fund. Like I said early, if we raise sufficient capital, we maybe would pick up 1 or 2 additional small projects in this fund in order to kind of take advantage of some good opportunities, but that of course depends. And so really the timeline for this fund is this is a 3 to 5 year investment. And if you needed to get your money out sooner than that for some reason, we do have some redemption rights and things like that are all in the fund documents, or I can share about that kind of in a one-on-one call later. Okay. So again, just kind of reviewing the goals of the fund. So we're trying to deliver a new kind of home for a new kind of homeowner. We're focusing on the 80% of non-traditional households that have different needs and want walkability and want a smaller footprint and want a more energy efficient home or a net zero home that is both cheaper to operate and generates less waste and everything. So then number 2, our goal is to build infill developments at a higher density with smaller footprint homes, and to do that from that energy efficient approach. And then lastly, our 3rd goal is to open local housing projects up to local investors or to individual investors, even that are out of the area. So right now our fund, that 5.3 million, is funded by about 50 individuals and families that wanted to see change in the housing market. And about 75% of our fund members are local to Bend, either part-time or live here full-time. And so that's been a really big part of our value. So thank you. We're done. We're done there. We'll kind of wrap up here. And we just want to invite you to consider an investment in our fund. A minimum investment is $50,000. We do have a little profit sharing incentive for investors that invest more than that, like 100,000 or 250,000, even $1 million. And so again, our next closing is December 31st. We have a PPM